Marcus, the IMF saying Russia's economy is headed for tougher times?
It is indeed. Hi there, Francois. Hi there, everyone. We're watching, of course, the latest developments in Ukraine this evening. Meanwhile, the International Monetary Fund has cut its growth forecast for Russia. Instead of the growth rate of 1.9% that the IMF had forecast, the fund now expects Russian growth of 1.3% this year. The IMF says that Russia is already dealing with economic headwinds, and geopolitical tensions with the West over the Ukraine crisis could make the situation even worse. Let's listen in.
The first one is an investment climate, which was not perfect to start with, and is probably a bit worse, and more hesitation on the part of investors to either put their money in Russia or leave it in Russia, so that one can expect fairly substantial capital outflows. Russia has large reserves, and therefore it can almost surely face those outflows, but it may well have to decide to increase the interest rate. So for all these reasons, we think that this will lead to low growth in Russia.
Okay, Olivier Blanchard speaking there, the chief economist of the International Monetary Fund. Now, that updated forecast on Russia's growth rate came as the IMF painted a rosier picture for the entire global economy. The fund came out with its much anticipated World Economic Outlook a little bit earlier, and it says that it expects 3.6% global growth this year, up from 3% last year. Our correspondent Lorna Shaddock tells us more now from the Washington headquarters of the IMF.
This was a broadly positive outlook from economists here at the IMF and the World Bank in Washington, D.C. for this year and next year. Growth for 2014 forecast at 3.6%, rising to 3.9% for 2015. And the US doing particularly well, its growth forecast at 2.8% for this year. A rather more mixed picture for the Eurozone there. Economists particularly concerned about its southern periphery countries, saying the recovery is yet to take hold fully there. They're especially concerned about the prospects for deflation. And also concerns about Russia and Ukraine's economy, given the recent geopolitical turmoil. Russia's overall economic outlook downgraded as a result of that. And investors less inclined to invest in emerging markets as the recovery takes hold in advanced economies. They're keeping their money where it's safe. So a mixed picture overall. Good news for the US, some good news for the Eurozone, but emerging markets will have to adapt to the overall recovery accordingly.
Lorna Shaddock reporting there. Now, the IMF also called on the European Central Bank to do more to stimulate the Eurozone economy, and that puts the fund in the same boat as France's new Prime Minister Manuel Valls. In his first speech to Parliament on the job, he called for more action from ECB President Mario Draghi and his colleagues. It came as Valls also pledged to lower the cost of doing business in France and to clean up French government finances. But he said that all of those efforts would be in vain if the euro remains as strong as it currently is. And he signalled that he wants the ECB to follow in the footsteps of other central banks and buy government bonds.
The European Central Bank pursues a monetary policy that's less expansionist than its counterparts in the US, UK and Japan. And it's in the Eurozone where the recovery is less vigorous.
Okay, let's take a closer look at the stock markets next. Over in the United States, we're seeing the indices snapping a three-day losing streak. Investors, they are looking ahead to a number of earnings reports expected throughout the course of the week. The so-called earnings season kicks off unofficially this evening with aluminium company Alcoa reporting first quarter results. In the meantime, you can see there that the Nasdaq is up 0.8%, whereas the Dow Jones Industrial Average is up 0.25%. Now, here in Europe earlier, there was red across the board when the continent's main indices closed. The Paris CAC 40 was down 0.25%. The Frankfurt DAX down 0.2%. There wasn't much in terms of economic data to direct trading, but the Ukraine crisis was seen to be putting a dampener on European shares. Let's talk you through a few other stories that we've been following for you. French conglomerate Bouygues is eyeing a sale of its telecoms unit after its failed attempt to buy rival SFR. That's according to the French newspaper Le Parisien. The paper says Bouygues has approached Iliad, the owner of the mobile network Free, to gauge its interest. The price of the deal is reportedly a sticking point, with Iliad unwilling to pay more than 5 billion euros for the telecoms unit of Bouygues. Meanwhile, Lufthansa says it's meeting with its pilots' union on Thursday later this week. The German airline is trying to resolve a dispute over an early retirement scheme that led to a costly strike last week. Around 3,800 flights were cancelled when pilots walked off the job. Lufthansa says the cost will be in the high double-digit million euros. And a US court has ordered the Japanese drug company Takeda to pay $6 billion in punitive damages. It's part of a legal fight over claims that the firm tried to cover up a possible link between its diabetes drug Actis and bladder cancer. Takeda's American business partner Eli Lilly was also ordered to pay another $3 billion. The two companies say that they'll vigorously challenge this decision. Okay, I'll be back again in around about an hour and a half with more business headlines. Now, though, it's back to you, Francois.
All right, many thanks, Marcus Carlson. Time now for